Light. It's all around us, and we need it to survive in the modern world. But we often take it for granted, right? Today, we are going to be talking about one of the companies that makes light possible. Welcome to Stock Stories. All right. Welcome to the Stock Story Show. This is where we decode the business behind the stock in order to become better investors by understanding the fundamentals of how businesses work. Hi, my name is Alex Mason, and I am your stock storyteller. On this show, we go through the entire S&P 500. We're literally going through component by component, and we also talk about mental models, which are the thought processes behind how we think about things. And my wife and I went from not knowing anything about investing to becoming financially independent by 30 years old, and we did it by investing in the stock market. And so today, we're going to be talking about a lighting manufacturer, one of the biggest in North America. So let's go ahead and just get into the episode. Today, we're going to be talking about Acuity Brands, ticker symbol AYI. And Acuity Brands is a lighting business. Now, let's talk about how they actually came into existence for just a moment. They started out actually as an entirely different company way back when in the 1940s and 50s as a business called National Linen Corporation. And what this company would do is they were headquartered in Atlanta, Georgia, and they rented out and sold linens, towels, uniforms, those kinds of things to other businesses that needed them. And that was their main line of business for many years. Now, National Linen was a very successful company down in the southern United States. And the thing about the linen industry is it's highly fragmented, or at least it was at this time. And so you had all these little mom and pop shops that were doing the same thing, but they weren't doing it at the same level that National Linen was. And National Linen became very successful. They started making all sorts of profits. And this ended up grabbing the attention of the United States government. Now, when a business becomes so successful that it begins to just crush and dominate its market, sometimes business goes along as usual, but sometimes the government takes notice and they end up filing something called an antitrust suit. Now, what this means is it basically says that the company cannot continue to grow bigger in its current form. It's basically a monopoly. And as a shareholder, that's what you and I want. We want monopolies. We want companies who are dominating. But sometimes the company becomes so dominant that it needs to break up, or maybe not break up, but it needs to diversify its lines of business so that it's not so focused on just crushing the competition. You can get some weird sort of economic effects when you have a monopoly because, well, we won't get into economic theory today. The bottom line is that in the 1950s, National Linen started to diversify its operations. So they started acquiring other businesses so that they wouldn't draw undue attention from the United States government. They got into businesses like the chemical business, the lighting business. They even got into the envelope making business. Of course, sending physical letters was really big back in the 1950s. So it was a big business to get in. Basically, they started diversifying across all these different products and they built up this kind of large industrial conglomerate around all these different business segments. Now, if you're getting value out of this episode, I would really appreciate it if you just show me some love and tap that like button. Thank you so much. Now, in order to increase shareholder profits, what management did was over time, they looked at the different business units that they acquired and said, okay, is this business growing or is it shrinking? And with the shrinking ones, they got rid of them. But with the growing ones, they doubled down and they bought more companies within that same segment in order to bolster that company's operations. Now, it just so happens that the lighting division was becoming very successful. And this makes sense from a secular perspective, right? In the 1960s, 70s, 80s, you have population growth, you have the post World War II boom that's still very much taking effect. Houses are being built, commercial buildings are being built, and what do they need? They need lights, they need electricity solutions, and that's exactly what National Linen did. Is they provided this through their lighting division and by buying up a bunch of other companies within that sector. Now, by the time the 1990s came around, the lighting division was a really big part of this business. It actually accounted for 40% of the sales, 30% of the profits of this larger conglomerate. And then what happened is that by 2000, the stock market bubble was bursting. And in 2001, the company was really struggling. The stock price was down. The company had taken on lots of debt. And so they were really in need of a restructuring of some sort. They needed some change. So what they ended up doing was they spun off the lighting and chemical divisions into one company. And that ultimately became Acuity Brands. Okay, now that we know a little bit about where this company came from and a little bit about its roots, let's talk about the company today. Well, Acuity Brands is a lighting manufacturer still today, many years since the spinoff has occurred, and they're doing their thing in the lighting segment. They are the biggest lighting manufacturer in North America, and they have lights people need to see. People need electricity. Now, it seems obvious that people need lights, they need electricity, but I want to highlight for you just how interesting of a segment of the business world this is because a lot of times we think of lights as just like this very basic commodity. You know, you have a light bulb or you go to Home Depot, you buy a light bulb, you screw it into your lamp or your light fixture at home and okay, voila, you have light and that's it. But it's so much more nuanced than this and I can say this personally because I actually used to work at a lighting company as an engineer, and there's so many different types of lights in the world. It's just incredible. So Acuity Brands is involved in manufacturing all different kinds of lights. They make residential lights, they make commercial lights, they make lights for sports stadiums. There's a big array of lighting applications that exist out there, and Acuity is really focused on all of those. I mean, do you really know how many different kinds of lights exist? There are decorative lights that they sell. They sell panel lights, shop lights, pendant lights. They sell lights that go underwater. And the applications just go on and on and on. And it just really kind of opened my eyes to understanding the fact that, hey, there's a lot of industrial and residential applications for lighting, just period. So Acuity Brands has two segments. They have their lighting segment and then their intelligent spaces segment. And the main bread and butter of the business is the lighting segment. And in that segment, they are the market leader in North America. They have about a 17% market share. And to me, that says a lot. If they have a 17% market share and they're the market leader, then lighting is still a very fragmented industry. And so maybe there's some opportunity for growth there. But essentially, that's what they do. They sell lights. It's very simple to understand. Now, on the intelligent spaces side of the business, this is where things get a little more interesting. It's not as clear cut as making some kind of light fixture or connector. Now, in the intelligent spaces segment, they're focused on more so software, things that help manage different light systems within, let's say, a commercial or an industrial building. And they have a couple of subsidiaries that they've purchased that they hope will grow in this segment. So they have the Atrium subsidiary that is basically a suite of software tools that helps people manage energy consumption, things like that. And then you have the Distech subsidiary, which it's hard for me to find more information on this, but it seems like they do some kind of automation in relation to HVAC systems. Now, as cool as this intelligent spaces group seems to me personally, when I looked at the financials, I didn't see much going on there. 95% of the revenue of Acuity Brands comes from the lighting segment. So this is still a very, very small portion of the business. And in fact, I think I'm going to need to see a lot more growth than is currently being shown from this segment in order for it to be interesting to me as an investor. Okay, let's take a look at the financials. I'm going to go ahead and go to the ticker terminal and just put in AYI. That's a ticker symbol for Acuity Brands. And let's go ahead and look now at the financials of this business. Okay, so let's turn our attention first to the income statement. This tells us the money coming into and out of the business from a profit and loss perspective. So as far as the revenues go, ooh, this is not good. 2017, the company had 3.5 billion in revenue. 2021, just under 3.5 billion in revenue. It's been pretty flat over the past several years. And yeah, they had a slight dip with COVID, but really this this company's revenue is bigger than COVID. Like the trends here are much more um, beyond the scope of the pandemic because we can look back historically over the last few years and they have not had really any growth at all in the revenue. And so to me as an investor, that's already a big red flag. Like, whoa, why are revenues not increasing? What is going on that this business is not making more sales? So that's kind of a bummer right there. And I do want to look and see what the profit looks like if we just go down to net income. And we can see that over the last several years, okay, net income is pretty much mirror the revenue. They had over $320 million in profit in 2017. 2021, just over 300 million. So again, a decline in profits, decline in revenue. This is a problem. This is a problem. As investors, we don't want this. And honestly, it's not even really worth going through a lot of the other financial statements right now because this is a business that doesn't have a strong engine of revenue to support it. And so I'm not going to waste your time. I'm not going to waste my time going through the financials of a company that don't need to be studied. So we're just going to stop right there as far as the financials. Okay, so let's wrap things up here. What have we seen? We've seen that Acuity Brands is a company with a long history. They're definitely a leader within the lighting space, but it's from a financial perspective, they're really struggling to grow revenues and profits. And that's a big red flag to us as investors. We want companies that are going to make more and more profits year after year. Maybe not necessarily exactly every single year they're making more profits. Maybe it's a little bit of a bumpier ride, but we should be able to see a clear trend within 5 years of financial data, in my opinion. Unless you're talking about a super cyclical company like an oil company or something like that, this is just not really acceptable from an investment perspective. But I do think it would be interesting to see what's going to go on here in the future. And I didn't get into it really much here today, but I did take a look at some of their recent quarterly presentations and I saw that okay, they have decent margins in their lighting business. Their returns on equity are okay. It's not like it's not a profitable business. It is a profitable business. It's just not a profitable business that's growing. And so for me, it kind of just is not really worth consideration. So that's what I've got for you today on Acuity Brands. Let me know what you think in the comments below. And I look forward to seeing you next time. Thanks.